powered by Keller Williams Experience. And today we're bringing you a market update for 2020. And we're going to look at the market as a whole throughout the United States. People always ask us, Mark and Wendy, how do you differentiate yourselves? And our number one answer is we are your real estate advisor.
And economists of choice.
That's exactly what differentiates us. We do not just open doors for our clients, we make sure that we educate. And that's actually why we're aligned with Keller Williams, because they are the number one technology and education company in the world. And so, with that knowledge, we arm our clients to not only make smart, but the best real estate decisions for themselves, their family, and their net worth. So we're going to take you through today. This is a two-part series. Today, we're looking at the market as a whole across the United States. And tomorrow, we're going to get hyper local in our local area with what's happening in the market. So let's jump right in.
Yeah, so looking at unemployment first. So the purple here is 2020 for this year from February to August. And the blue on the right is unemployment during the Great Recession of '09 and '08.
Now, Mark, why are we looking at unemployment? Why is that our first slide?
Well, just because a lot of people there's a huge spike this year in unemployment and a lot of uncertainty around jobs and employment. And people are asking, how could the market be so good if there's so much unemployment? So we're just kind of going through here. We had this recovery took 4 years to kind of recover. It peaked out not quite as high as this year and leveled off, but it took 4 years to recover. This was a 14% increase and it dropped quickly over 4 months. So it's a 4 month versus a 4 year recovery.
And we're going to look at this next slide. So Mark asked a really good question. So how is the housing market booming? And this slide really does a great example of explaining that. So you're going to look all the way to the right. So our least paid individuals or the least paid industries have the highest unemployment. But the industries that are the highest paid have the lowest unemployment. So look at that 4.2. That actually could be just people changing that percentage in when we're looking at this from an economist's point of view. That actually could just be people changing jobs, that low 4.2. So this really explains that not everyone, even though unemployment is skyrocketed, not everyone is affected equally.
Okay, so this is unemployment and housing by age. So over 35, if you're over 35, that's 72% of the buyers in our market. And they're, again, not affected by the unemployment, 6.8%. The younger, which are 25%, 25 to 34, and 24 and under, which only buy 3% of the homes, they're significantly more impacted also by the unemployment.
So this really couples and mimics that last graph. It's showing that this really explains. So they said that this is the first time in America that Americans have savings and they see an opportunity and they're seizing the opportunity of home ownership or to either capitalize on their largest asset or to advance their family into a different home and space. So again, you can see the largest group of home purchasers are least affected by the unemployment. And so that's what's fueling. Coupled with that savings, it's really fueling our housing market.
Okay, and this is home sales. You want to talk a little bit about this?
Yeah, so I guess the biggest, and we're just kind of giving you a really brief overview. So if you want to dive deeper, please let us know. But the biggest takeaway on this is there's not a huge change. 2019 was our strongest real estate market to date. And look at where year to date, year over year change in home sales is only down 4.7%. And that's actually being fueled the lack of inventory. And we're going to talk further about that.
Okay, and here you've got the home prices going down. As the home over the course of the year, the rates have dropped. and you can see an inverse relationship to the home prices. So the affordability, the buyers can afford more at lower interest rate than they could, 6 months ago. For example, a $300,000 buyer in
In
March
March, yeah.
could afford $365,000 now. So sellers are getting stronger prices and buyers are able to afford more.
Yeah, it really is the perfect storm. So our sellers, like Mark said, are getting nice, strong prices because the buyers, the benefit of being a buyer right now is that low interest rate. We joke, not joke, money is free.
And you've got a year over year change of 6.4% increase in prices.
And coupled with month supply of inventory. So let's go to that next slide. This is where we're seeing the biggest change. So again, yellow is 2019, the purple color is 2020, and you can just see the differentiation between the month supply of inventory.
Yeah, and interesting to note, between 1999 and 2016, there's only been 4 months with 4 months or less of inventory. And if you go from 2017 to today, there's been 20 months out of the last 43 with 4 months or less of month supply of inventory. So,
and I think it's really important for you to understand the way that we look at inventory is 0 to 3 months. Is if we have low inventory between 0 and 3 months, it's a seller's market. A balanced market is between 4 and 5 months, and a buyer's market is anything over 5 months supply. So that's why that's so significant right now. So you can see overall, this is, remember, we're looking over the entire United States. We're at a seller's market.
right. And those numbers do change. And if you want to dig into your particular situation, like if you have a higher price home or a luxury home, those numbers are a little different.
They shift.
So contact us for more details to dig into it.
And remember, join us tomorrow because we're going to go hyper local. Same information, just super hyper local.
Yeah, and this is just local market conditions. So you can see sales are down everywhere, different percentages, and you can see the inventory is down everywhere, different percentages, but you can also see that the prices are up everywhere. So, but they're all heading in the same direction, but all at varying levels. In Chicago, you're at 16%, 17% less sales going on. So there's less homes out there, less homes to sell. Inventory's down 17%, and the prices are up 2.4%.
Yeah, just super interesting to look at the different markets. What's next?
So yeah, what's next is I think we're going to have there's a lot of uncertainty, but I think we're going to have up until the election, hopefully a good run. But after that, there's still a lot of uncertainty, and until
it's stemming around that vaccine.
Vaccine.
That's really that's the elephant in the room is what's happening with COVID. How quickly are they going to, if they do come up with a vaccine, what does that look like? So, and as far as the housing market goes, with the low inventory and the low interest rates, we still are seeing that really nice upward tick with sales, and it looks like the recovery is going to be typically kind of slow, to be honest with you.
Yeah, and the numbers and the month supply of inventory, it can't go on forever at the rate it's going.
And we talk about this all the time is we always, when we're bringing you this information, it's because we're looking back historically, year over year trends and seeing the trends and what it follows versus. So the biggest unknown is just we're not sure where we're leading into. But as of right now, low inventory, low interest rates, strong prices on homes. So it's a really great time to actually, it's a great time for sellers and buyers.
Yeah, so if you're interested in finding out what your home is worth in this market, or if it's a good market for you to buy or sell in, just reach out to the Pawlak team. We'd love to be your real estate advisor.
An economist of choice. Our callback number is 630-514-6615. And again, please join us tomorrow as we dive deep into the local market and get super hyper local on all this information. Take care and make it a great day.